Okay, good morning and welcome to the Early Bird. And here we're looking at the XJO on a daily chart here. And well, we've been following our little wave count up through here. It's got a little bit messy sort of up here, but now we should be, well, now we'll pull back into this B wave here. And the SPY overnight has already done that for us. So the cash will catch up and the SPY will sort of gravitate into support at the 4600 here, or perhaps a little bit lower than that, around its low point here. There is some trade figures coming out the 11:30 today, so that should sort of support that low in place there. And the US markets, as you know, they've fallen out of bed. So they've actually had 5 waves to the downside last night. Pretty much complete those 5 waves down, and we'll look at those. But after those 5 waves that they have down, they'll have a 3 wave counter trend, and that 3 wave counter trend will help us push up through here. How far we actually go up here, I don't know, and I haven't known, and we've talked about that in terms of all these Fibbo retracement levels here at 61.8, and but me, I sort of like a few other little odd things. So I always liked the little gap in here. I liked the 472 area here, and of course the 48 up there. But we also know too is that when we're looking at the markets here, if we're looking at the 47 here, like we were saying, looking on the SPY, so we can expect a correction across the 47. But before the price is actually disconnected from the 47, we would have to see it sit on 4730, the top of subgroup 1. And once it's got support on that, then it can move higher to the midpoint of 50. But it could never do that. So when we do look at the SPY, you'll see that that it couldn't find support on that sub-level group 1, which is really important to understand. I know I keep harping on about it, but it is important. Okay, we'll talk about that later. The general gist of things is that we have our 5 waves up here in terms of the ASX 200, and we'll be looking for a 3 wave counter trend. Yep, and then once that's complete, we'll be looking for 5 waves up. Now, I know that the Dow Jones is going to be under a lot of pressure after it's done finished its 5 waves down, 3 waves back up, and then it will be going to the downside again because we've got a clear ABC rally in the Dow Jones. We'll talk about that. But we are looking for the bigger picture. Our bigger picture was to come down further through here. And our objective is that, yes, we would do some little trades coming up through here, and we do have some in there. We also have some shorts in there as well, but we want to be much more net short in this situation over here. So this move going up through here is going to be where we're going to be looking for trading short. So we don't want to trade short today because the market's already going to open and go where it's going to go. Sure. So, but look, anyway, depending on your trading time frame, be it daily, weekly, monthly, whatever the case may be, this is what we're looking at through here, and choosing your time frame and setting your rules around your trading time frame will help you navigate to get on the right side of the market to the downside, and also control your risk as well. So anyway, everything's sort of on plan there, and we'll have a look at this. So first up is what have we got here? The S&P 500. That's fine. So what we were looking for here is we were looking at the structure. We didn't know if we have a bull market going up, or this was just a corrective wave structure going up. But we understood that. We had a bullish count in play, an impulse wave to the upside, and also a corrective wave to the upside. And it was when we've got support on the 1350 there, then we could consider that we would have 5 waves up in terms of the 1, the 2, and then up for the 3, which would be this little guy here. And then we'd be looking for a wave 4 to pull back into this area here, or 38.2% of the 3rd wave. So from here up to here, 30 odd, 40, say 40% back, but normally pulls back to the third, fourth wave of one lesser degree, which is in here. But we look at the levels, so back at the 1330 there. So as a wave 4, this is really penetrated down through here. So it's not a wave 4. It's an A. This is an ABC coming up. So it's an A and a B and a C wave coming up, and a C wave's always got 5 waves in it. So we do have a nice 1, 2, and then 3 waves for wave 3 here, then 4, then 5. So this is really quite clear as a ABC now, and that's what we'll be looking for here. So now what we're looking for is we're looking for 5 waves down, yeah, and then we're looking for 3 waves back up in terms of an A and a B and a C, coming back up here for wave 2, and then we'll be looking for a wave 3 to come down. Now wave 3 coming down here will be longer and stronger than this one here, and with this one here we can see that, well, we'll have a look at some of the other markets, but basically we're looking for 5 waves coming down through here. This would be the center of the structure in here, where the strongest part is here, so we're in the 3rd wave here. So we're quite close to the wave 1 being down here, so we can look at that at the anywhere between the 1310 and the 1300 here, and then we'll be looking for an A wave coming back up as a bit of a bounce, a B wave coming back into here, a C wave into here, for wave 2. Now the norm is that we'll get 5 waves down here, and then it would pull back 61.8% of this mark of this length here, but that may not be the case. So we may see that this ABC correction here is really across this level here, so it would just sort of be sticking to here like this here. But any long-term sort of short positions here, yep, you would want to see the market locked under the 1300 here, which is a minor trading level 3. So when it does eventually move through here and can't get back up through here, then you can look to short here. Of course you can short here, but you'd have to leave the stops, you know, way back up here above supply. This would be the supply level through here. So any stops at this stage would have to be over here, because what will happen is, you know, we may get this ABC coming back this far up through here, so that would be a problem. So look, it's okay getting short positions, you know, all around here at different prices, that you'd be building in a longer term short position here, but you know, you would want to really stay inside your budget and your risk, you know, and just sprinkling little short trades on here on the mini side of the S&P 500. The S&P 500 in terms of wave count is a little bit better than the Dow Jones, because it's 500 companies and not 30, but we took a bit of a lead from the Dow Jones there, and we had a positive note on it being above the 12,500. But we also understood that the move coming up through here could still be an A and a B and a C counter trend rally, and it could also be an impulse wave unfolding as well. So the impulse wave would have to stay, this would be a wave 4 coming back and a wave 5 to move up through there, and that would give us a nice 5 waves up through here in terms of 1, 2, 3, 4, and 5. And but that wasn't the case, so it's been penetrated here. So we're left with a very clear ABC correction and a very clear impulse wave to the downside. So what we're looking at now is we're looking at 5 waves coming down for wave 1, just like I talked about with the S&P 500. We'll be looking for a rally for wave 2, and then we'll be looking for a wave 3 to the downside. The wave 3 should be this length here plus another 60% added onto that as well. So quite a meaningful push to the downside if correct, and I feel that we are on this. So yeah, on the 2-minute chart here, we can start to have a look at the structure coming down. This would be This is on a 2-minute chart here, just me breaking it down, having a bit of a look at it, because a chart's got a bit of a trend has got a beginning, a middle, and an end here. And the middle's always the most powerful, is because it's where the volume is. Normally in bear markets, coming to the downside, being strongest in the middle there. Yes, it is part of volume coming in, but it's also, these days, it's also stops being triggered out as well, on computer stops basically being triggered out, that really sort of clicks it down. But basically the structure for a trend is the beginning where it's building, the middle where it's fast, and then the ending part here where it's creeping down further. So we're seeing this move to the downside through here, but sort of finding in support down here. So just looking at the structure finishing in around here, and then this would all be like a wave 1 coming in down here, and we'll see a wave 2 come back up in an ABC correction. And that ABC correction, when it comes back up, if we can have a look at our market just for a second, this is the this is the XJO. And this is the 5 waves that we've been looking at, working up over the few days here, and now we're seeing. Now we will see today on the XJO this coming down. Now remember, the SPY is already down here at 4,600. If we have a quick look at that for a moment, that would be the SPY coming down through here. So we're looking at this being an A wave, a B wave coming down through here, even though it's got a little ABC here, but it's the B wave, and then we'd see a C wave up. So it's pretty much this pattern here. So if I could just expand that out a bit. So we're watching that move coming up in 5 waves. We're watching this one come back in 3 waves here on the SPY. The SPY is already down at 4,600 here, or close to it. So the cash will make a bit of an effort to come down through here. But it's this move up here that we're looking at. Now, I don't know if it will take this top out here. Okay, so that's a bit of a problem. But the Dow Jones should be rallying while this is going on through here. That's just sort of lining them up. So as this completes down through here into this area, we'll see that push up, and we'll be seeing the S&P 500 move up through here, the Dow Jones move up through here on the 2-minute charts, 30 minutes, a 2-minute chart. So this will finish, and then that rally will come in through here. So that's what will push the markets up at that stage. Now, the another thing driving this, we talked about, I'm just going to flip straight to the currencies. I hope you don't mind. But the one thing that I wanted to have a look at here, we were talking about this yesterday. This is the US dollar here, the US dollar index, or rather a futures contract on that. We're looking at this current move that's moved up through here. We're simply looking at 61.8 retracement level, which is down at the 74.28 here, and at the 74.28. So we figured to ourselves that if the market broke lower than the 74 here and found that as resistance here, then we'd have a bigger bear market on our hands. But as you can see here, we're seeing the push up in this market here. So if we find, it'll be a retest of the 75 there. So that's where the Dow will find its low. As this market reacts here and comes back, yeah, the Dow Jones will be pushing to the upside. So eventually, if this US dollar index finds support above the 75 here, and we start getting a 5, 3, 5, 3, 5 structure, sort of pushing to the upside, 5 waves up and 3 waves back, then we know that we've got a low in place here once that's the case. So the Dow Jones will be pushing down. So this is the other flip side of the market. But while this is occurring here, then the euro would also be finding its top as well. While this has been pushing down, the euro will be finding its top, and it's doing that at the moment. So we were looking at the euro. This is a bit messy here, but look on our charts and you'll see that we're looking for 5 waves up here to make a C wave of wave 2 or B wave at the 145, and that's the top that we're looking for. Now that's in play, and now we're looking at the euro here pushed to the downside here. And we're also talking about the 144 here, a number, Fibonacci sequence of numbers, and also Gann's 144 and the Fibbo and the Elliott and all that. It's basically part of the 9 series of numbers, part of the 72s, which is a squaring number, and we're certainly seeing it square time and price here on the turn. So all good there. The Australian dollar is a little bit different. And remember, we were talking about the Australian dollar being the same wave count as the ASX 200, and we were looking for that for 5 waves up, which is on top of this little dude here. I don't know why that shifted across there, but anyway, an A wave to here, and then we were looking at a little A, B, and C here for the B wave here. So there should be a B wave in there. So an A, and then a B wave into here, and then a C wave up here to finish it up here. So that would be exactly the same as the ASX 200, but we do need to be careful because when markets go into fear mode, they tend to look at each other, and then they all start to do the same thing. So we may not see this new high come in here on the Australian dollar, and we may not see it on the ASX 200 either. So we'll be paying close attention to this move that comes up through here, and once again we'll be looking to short from that point there. So the ASX 200 and the Australian dollar we can use together, but because there's a lot of fear in the market, we need to bring the S&P 500 into the situation as well, because the S&P 500 and the euro will be moving together, and the US dollar will be doing the exact inverse to the S&P 500 and the euro. So it's important to get that clear, and also use the levels and the wave counts on both sides of the market. So using the US dollar index as support and resistance on certain numbers, and then compare that to the markets that you're trading, and also your trading time frame as well. Getting on to the drivers here in the market. First of all, this is gold here, and we were looking at gold's structure coming up through here. And we understood that a couple of things here. We understood that the move up would be sort of completing around this area here at the 1550, and we had 2 counts for this market moving up through here. So we don't know which one is which just yet, but we do know that because we've got that 5 wave, it's pretty damn messy, I know that, but we know that at the 1550 we're going to get a reaction. So we could get this as a C wave here, and that would be the end of it, basically here, and would see a larger bear market unfold from this point here. That's certainly on the case, but also we need to get confirmation because it still could be a 3rd wave up through here. So in one way or another, it's not really going to matter, because trading local gold stocks, if our general indices are down, if stock is down, then those gold stocks will be down, even though the gold is up, so to speak. But anyway, we'll watch that further. That's just one sort of thing that we need to work out in terms of the bigger picture. We knew the shorter term here. We knew the turn here. We got that. And we did all the way up through here, which is quite nice. And then up to this point. So up to this point, we were sure of that. Beyond this point now, we need to allow the market to unfold to a point that it can reveal to us its next largest degree of pattern unfolding. So we need to chill out here. Now, the oil market, we understood that we had a 5-wave structure moving down through here, and this 5-wave structure moving down. And once that's finished, then we'll be looking for an A and a B wave, and then a C wave moving up through here. Was expecting it to move higher through here, but it didn't, and it's followed stock. I guess in trading terms, if you've got an understanding of group 1, this is group 1 here, where we've got 1, 2, and 3 here. If support is ever found on top of group 1 here, then we can look at going higher. But it's the job of group 1 here to hold the price to the closest largest number. As it is with group 2 here, its job is to support the price to the closest largest number as well. So group 1 and group 2 here are like filters. So if group 1 finds support, we'll be going to the upside. If group 2 here fails to find support, then we'll be going to the downside. And you use those as triggers to enter into the market or to build into the longer term positions. So this is going to follow stock, and it appears we've got an impulse wave to the downside. So in one way or another, this particular rally through here would be complete. We'll see how we go with that. But once again, we'd be looking for, or you need to look for, we do, whoever, in one way or another, if you're trading this market here, we'll be looking for 5 waves down through here. That would be the third wave in the middle. So from this point, it would be from here, it'd be down for 1, back for 2 to here, and then in the third wave down, which would be 1, 2, 3, 4, 5. So there'll be a 4 and a 5 here. Then there'll be an A and a B and a C coming back into here. So once it fails in its second retest here, we can take positions to go shorter through here. But it's begun. Now, the copper market, which is central to base metals, as copper's used in everything, and we've been following this wave count here. We've just sort of stayed with the wave count. It's been quite a journey. Just sort of going back over this a little bit here. We were looking when it started. We were looking for this third wave down here. And we navigated through the fourth wave, understanding that it was a fourth wave, and then we'd come down in 5 waves for wave 3 here. And then we were looking for a bigger wave 4, and this wave 4 is into here, yeah, and we were looking for an A to here, then the A, B, C to here for the B, and then 5 waves up for the C wave to here. And we'd been tracking that C wave up through here in terms of the 1, the 2, the 3, the 4, and then up to the 5 through here. And it's been quite interesting, really, because even through here we tracked it up for wave 1 to here, wave 2 to here, 5 waves in here for 3, back for 4 here, and then up for 5 here. And even yesterday we talked about calling that top in there. We said that well, if that's going to be it, that would be the top right there. And then we've just seen this unfold to the downside through here. This is one of the reasons that this and the ASX count was the reasons that we hadn't put any long trades out over the last 2 days and just kept a very conservative view until this has folded further out. And now we're starting to see impulse waves to the downside. This here is not 5 waves to the downside just yet. It's only 3. This is the C wave, or the third wave in here. There'll be 5 waves in this structure here, with the third wave in the middle here. So this would be down for wave 1 and 2 to here, then down for wave 1 and 2 of a smaller degree, 3, 4. So we still need to see the 5 waves actually complete for the copper market here, and it's not done that yet. And also, I guess while it's still above the 400, it's sort of classed as support here. But as mentioned yesterday as well, that under the 410 here would be under support here would be a bearish signal, at least, or a piece of the puzzle. So we'll see that develop down further. But what we'd be looking for down here is that in a bit of a nutshell, if a drawing tool works while the video is playing, we'd be looking at something like this here. We'd be looking for wave 1, wave 2 here, wave 3 to come down somewhere like this, probably a bit longer, wave 4 coming in here anyway, and then wave 5 coming down here, following this bigger blue pattern down through here. Okay, that's about it really. So yeah, I just want to sort of go back on to have a look at our our local market as such. So so with this with our this is the SPY here, and it's leading the way, of course, because it's overnight. So we're looking for this to find support in here, and then we need to understand we'll be looking for a 5-wave structure going up through here. Technically, the 5-wave structure should take out the high here and bring us up into the 4772 and the 48 here. Okay, now I don't see the Dow Jones making new highs. So when we look at the Dow Jones here, we'd be looking for 5 waves down through here, wherever that's going to finish. It doesn't really matter at this point in time. It's not worth spending the time on it. But then looking for that 3 waves back up here. So on our markets, we'll be taking out the previous high, but on the Dow Jones and the S&P 500, they won't. It should just go back up 61.8%. But we'll be looking at an ABC, and it may not come back up that far either. So this is the thing that we need to work out next. We'll be looking for a 3-wave counter trend in the Dow Jones, wherever that is. That's what we'll be spending, what's it now, Wednesday, Thursday, Friday. So, you know, we could be seeing, if we see a weaker close on the Friday, we could see Monday, you know, really full on down, because this move down last night was one of the biggest moves to the downside we've seen on the Dow for a long time. So yeah, we'll be seeing strong moves to the downside, and we'll be seeing creeping moves to the upside, and that weakness is where we need to short into the market. And being on our back on the SPY here, looking for this, you know, I just don't know just yet. I need to do some homework, but everything's been going according to plan. We've got the A wave, the B wave, and the C wave moving up. Now, what I'm a little bit afraid of is that if I just point out my sort of my thing that I'm a little bit sort of if we've made a mistake, this will be where the mistake is. This move coming up through here, the 1, the 2, the 3, the 4, and the 5 to here is quite nice. That's all pretty sweet in terms of the wave count, yeah. But this bit here is it just doesn't fit right. Do you know what I mean? It's just not quite right. So it's a bit more accentuated on the futures market, where we see this larger thing happening here. So yeah. So anyway, there could be sort of mistaken. So what we've got to work out is we need to pay really close attention to the S&P 500, the euro, and all the markets that are fear-based and are moving together, because when this rally comes back up here, you know, it may only come back into here somewhere and then roll over from there. So, and then we would be looking at this as down for wave 1 and back for wave 2 and then down for wave 3. Do you know what I mean? So we need to understand that particular point, and we also need to keep in mind that, yes, this is the A to here, the B to here, and the C will be moving up to there. So look, we may make some trading mistakes in here and take some small losses in the robo on the ASX and the weekly. So be aware of that. But we just need to work through that and get through that. It can take, you know, it can take 2 or 3 times to get the right place on a trend to move in there. But what we can also do as well, when we're using the robo method, just as an example, if we are coming down, then we can add on each new bar. We don't sort of normally do that, but you know, if we start moving down here, we've got a small position and we want to add to it on a thing, then we can add on the next bar coming down, you know. So that's what we'll be looking to do. But I think a nice variation of daily robo trades and weekly robo trades would be quite good. And just in the bigger picture here, just to sort of bring things back into perspective a little bit here as well, is that this is what we're looking for in the bigger picture. We've got we've moved up through here on the XJO, and we're looking for an A and a B wave, which is complete up here, yeah, and then we're looking for 5 waves down here into around this area here, the 38.2 so the 61.8 retracement level is down around the 3.8 here. The 61.8 retracement level from that low to that high, and then 61.8 back. But we'll just stay with the wave structure, and we'll be looking down in here. And this would be, the banks lead the way. Remember that. So that's why we've got some shorts on two of the weekly robos on the banks, and the banks are just, they just lead the way. So this is what we're sort of looking at here. Yeah, so pretty exciting stuff, and yeah, let's see how we go. Alrighty, well, that's it. So good morning and good luck.